Hello. Today, we will once again learn how to analyze several different price movements. In each of our videos, we will carefully examine various types of market actions to find ways to increase our capital. By the way, I'd like to mention that I make an effort to share various strategies with at least one short video every day to help you enhance your trading experience. This way, you can have various trading methods for different price movements like downtrends, uptrends, and sideways market conditions. Before we begin, please consider subscribing to the channel and don't forget to hit the like button if you enjoy the videos. Let's get started. Here, we can clearly see a downtrend. First, we will wait for the trend line to be broken. While the price was moving downwards, the buyer group attempted to set a trap by placing a trend line. Novice traders often assume that the trend has been broken in such situations and rush to open long positions to avoid missing out on the rise. However, the market-making group setting the trap waits for a while and then sells, stopping the positions of inexperienced traders and creating a comfortable buying opportunity for themselves. Here, the situation I mentioned earlier just occurred, and after a short sale, the buyers, this time, made a significant purchase, making it appear as if the downtrend has come to an end. And later, an inside bar formation occurred. A breakout to the upside of this formation will be a significant criterion for the price to start rising. In this case, attempting a long position would be a good choice. We can see that the inside bar area was broken with a high-volume bullish candlestick. It is possible to enter a long position. As you can see, step by step, we attempted to break a trend and, after it was broken, entered the trade with additional confirmation, and when all these conditions were met, it turned out to be a strong trade. The Darvas box strategy is a stock trading strategy used in financial technical analysis. This strategy was developed by the famous dancer and investor, Nicholas Darvas, and helped him amass a substantial fortune in the 1950s, garnering the attention of many investors. The Darvas box strategy involves observing the price movements of stocks based on specific rules. Here are the fundamental principles of the Darvas box strategy. Box formation. The first step is to observe the price movements of a stock. Darvas noticed that a stock often trades within a specific range, the box. This box represents a particular price range. Box breakout. Darvas considers it a trading signal when a stock breaks out of this box. If prices break above the upper boundary of the box, it is considered a buy signal. If prices break below the lower boundary of the box, it is considered a sell signal. Stop loss and target prices. Darvas places a stop loss order and sets a target price when entering a position. The stop loss is used to limit potential losses, while the target price is used to take profits. Darvas employs a disciplined approach to protect his positions and maximize profits. Box repainting. If prices break out of the box but later re-enter the box, Darvas closes the position. This implies that the signal was false. The Darvas box strategy is known for its simple and disciplined approach. We can keep the settings for the Darvas box indicator as default. Additionally, please optimize the settings for the modified volume indicator as shown on the screen. The gray area you see on the screen represents the consolidation zone created by the Darvas indicator. The Darvas box strategy considers this area as a resting place where the price consolidates before determining its direction, and it plans to open trades based on the direction in which the price will break out of the box. As you can see here, the price has broken below the Darvas box. We aim to avoid falling into a potential trap in the market by using the volume indicator as an additional confirmation tool. The downward breakout movement is confirmed by the dark red high-volume bar. Now, a short position can be entered with greater confidence. We can see that this is a very clear breakout, and with the confirmation from the volume indicator, it's indeed a successful trade. Now, let's move on to a different case. We can see that the buying group is consistently driving up the price in the market. Of course, the selling group will intervene at some point. We can see that the trend line we've drawn has been broken to the downside. However, this image alone does not definitively signify the end of the uptrend. To reach this conclusion, it is necessary to observe the price making one or more lower lows. Nevertheless, this image can give us the impression that a downtrend is forming. And after the trend breakout, we can see a clear lower low level has formed. Now, to make a metric trade, we draw a Fibonacci tool from the highest level created by the price down to this lower low level. Every step in this trading strategy model should be metric because it is based on Fibonacci. After the downward breakout of the trend, the retracement should not touch the 0.236 coefficient, otherwise, the expectation of a short position becomes invalid. However, it is essential for the price to visit the range between 0.236 and 0.618. After the price visits the expected coefficient range, it would be suitable to open a short position when high-volume candlesticks form in the downward direction, confirmed by the volume analysis indicator. The stop-loss level can be set above the last swing high, or if one prefers to adhere to the metric model, it can be considered above the 0.236 coefficient. According to the rule of this strategy, the target should be the 1.618 coefficient. When there are two consecutive bar closures below the Fibonacci 1.13 level, the stop-loss level can be pulled back to the entry point, and when the price reaches the 1.618 coefficient, the trade can be closed entirely. Alternatively, a 50% profit can be taken, and the 2.13 coefficient can be set as the second target. As you can see on the screen, although the price formed a double bottom pattern by testing the 1.618 level twice, it continues to move lower towards the 2.13 level. Dear friends, in this video, we have also covered a few different technical analysis strategies. We will continue in our next video. Additionally, I would like to invite you to my Telegram group, and I'm leaving the invitation link in the description. Please don't forget to subscribe and like the videos. Goodbye.